Opening a business bank account is not just paperwork. It is the moment your idea steps into the real world with structure, credibility, and control. Money becomes organized, taxes become simpler, and partners, vendors, and lenders take you seriously. In 2025, you can do much of it online, but the smartest founders still prepare like pros. This script walks you step by step, in plain language, so you move from intention to an approved account that actually supports growth. Step 1 is choose your business structure. Decide whether you will operate as a sole proprietor, a partnership, an LLC, or a corporation. Your goal is simple. Separate the business from your personal life so risk and records are not mixed. Once you select a structure, keep every official name consistent across all documents. The name on formation papers, tax registrations, invoices, and your future bank application should match exactly. Step 2 is secure your tax identification number. In many countries, this is an employer identification number for the company. In others, it is a national tax number or a business registration ID. Even if you are a one-person business, a separate tax ID is safer and more professional. It prevents you from sharing personal identifiers on every form and becomes the anchor number banks use to verify and track your account. Step 3 is gather your proof. Banks complete strict identity and compliance checks, so assemble a clean document pack before you apply. Include government photo IDs for each owner and signer. Include formation documents such as articles of organization or incorporation, partnership agreements, or trust papers if relevant. Add any trade name registration, business licenses, and a simple ownership chart that shows who owns what percentage. Keep digital scans ready and organized. Step 4 is define your contact identity. Choose a business address, a dedicated email, and a phone number that will appear on statements, invoices, and bank records. If you plan to use a virtual office or mailbox, confirm your target bank accepts it, since some require at least one physical address for a responsible person. Consistent contact details reduce approval delays and look professional to anyone who views your statements later. Step 5 is shortlist banks that fit how your money will actually move. Traditional banks with branches may suit cash deposits or complex services. Digital business banks can be faster for online companies and offer strong integrations. Community banks and credit unions often provide personal attention and flexible decisions. Write down your top 3 options so you can compare fees, features, and support with a clear head. Step 6 is compare account features you will use weekly. Look for low or no monthly fees, a generous number of free transfers, fair wire costs, easy mobile deposits, and strong mobile apps. If you sell internationally, check multi-currency support and incoming wire fees. If you handle cash, ask about deposit limits and the nearest deposit location. If you plan to scale, ask about upgrade paths to treasury services and lines of credit. Step 7 is confirm integrations with your existing tools. You will save hours if your account syncs cleanly with your bookkeeping platform, invoicing tool, and payment processors. Ask whether real-time bank feeds are stable. Ask whether you can create sub-accounts or envelopes for taxes and reserves. Ask whether virtual cards are available for subscription control. Good connections reduce manual work and prevent accounting messes later. Step 8 is prepare a one-page business brief. Keep it simple and specific. Describe what you sell, who you serve, how you earn revenue, and the typical payment methods you expect. Include a realistic estimate of monthly deposits and the countries you interact with. Banks like Clarity because clarity reduces risk. This short brief answers most compliance questions before they slow you down. Step 9 is submit your online pre-application. Most banks allow you to enter core details first. You will provide legal names, tax ID, ownership percentages, industry category, contact info, and expected activity. Be conservative and honest with projections. If your application triggers extra review, respond quickly with the documents you already prepared. Speed and accuracy here shorten the path to approval. Step 10 is complete any in-person step if requested. Some banks still want to see at least one signer at a branch, especially for new entities, cash-heavy operations, or international ownership. Bring originals plus printed copies of everything in your document pack. Dress professionally, speak clearly about your business model, and answer questions with confidence. A respectful, prepared meeting builds trust that pays off later. Step 11 is fund the account and set a clean break. Make the opening deposit and from this day forward, use only the business account for business income and expenses. Pay yourself via transfer or simple payroll. Do not swipe the business card for personal groceries. Separation protects your records, your taxes, and your credibility. It is the simplest, powerful rule you will keep. Step 12 is create money buckets inside the business. If your bank supports sub-accounts or envelopes, open one labeled taxes and one labeled profit reserve. Move a fixed percentage of every deposit the same day it arrives. Your taxes will be funded before stress can appear. Your profit reserve will remind you that the business serves you, not the other way around. Automation turns good intention into a reliable habit. Step 13 is connect your payment rails. If you invoice clients, enable card and bank transfer options and route settlements to your new account. If you run an online store, connect payouts from your platform and processors. If you accept in-person payments, use a point of sale that deposits directly into the business checking. Fewer processors with deeper usage often beat many processors with shallow usage. Step 14 is link bookkeeping on day 1. Connect your account to accounting software so transactions flow in automatically. Create simple categories for sales, cost of goods or direct costs, operating expenses, taxes, and owner pay. Reconcile weekly. A 10-minute weekly habit beats a 10-hour quarterly scramble. Turn on alerts for large withdrawals, low balances, and incoming deposits so you stay aware without constant checking. Step 15 is set permissions and controls. If you have a partner or a small team, decide who can view balances, who can spend, and who can approve transfers. Create separate debit or credit cards with individual limits. Require dual approval for larger payments. Keep credentials private and use two-factor authentication on every login. These controls keep money safe and reduce both mistakes and temptations. Step 16 is build a simple spend policy. Put it in writing. Define which expenses are approved, which card to use, and the receipt rule everyone must follow. Small teams often skip this and lose money through sloppy habits. A one-page policy with clear categories and monthly limits will save you thousands over a year without feeling restrictive. Step 17 is handle cash and checks correctly. If you take cash, deposit it promptly and record each deposit clearly. If you receive checks, use mobile deposit where available and track physical copies until cleared. Avoid mixing personal cash with business cash. Keep a small petty cash log if you must carry cash for emergencies, then reconcile it monthly so your books stay accurate. Step 18 is manage international needs with intention. If you pay suppliers abroad or sell to customers in other countries, learn your bank policy for incoming and outgoing wires, currency conversion spreads, and cutoff times. Consider a multi-currency account for major currencies you touch often. When possible, batch international payments to reduce fees and plan around settlement delays. Step 19 is document everything for compliance piece. Keep your formation documents, ownership chart, and licenses in a secure cloud folder. When owners' addresses or control persons change, update the bank promptly. If a bank team asks about a transaction, reply the same day with invoices or contracts. Fast, transparent answers keep accounts healthy and prevent freezes that disrupt your business. Step 20 is use the account to build business credit. After a few months of steady deposits and clean usage, apply for a business credit card in the company name. Use it for predictable expenses and pay in full each month. Ask your bank which activity level and average balances they like to see before considering a small line of credit. Consistent cash flow plus on-time payments become your reputation. Step 21 is set a weekly money rhythm. Same day every week, log in, reconcile transactions, move your tax percentage to the tax sub-account, move a small profit percentage to your reserve and transfer your pay. Review upcoming bills and set any needed approvals. This rhythm takes minutes and replaces anxiety with momentum. The business will feel lighter because you can see what is coming. Step 22 is avoid the classic mistakes. Do not open the account and keep using personal cards for business. Do not let unmatched transactions pile up. Do not enter wild projections on your application that invite extra review. Do not leave team access wide open because it feels convenient. Simple discipline here prevents big headaches later and signals to partners that you run a tight ship. Step 23 is create an upgrade path before you need it. As volume grows, you may need higher transfer limits, faster payouts, or treasury tools. Ask your bank what thresholds unlock better features and pricing. Keep a short list of alternative banks in case your needs outgrow your current plan. When you are ready to switch, do it methodically. Open the new account, redirect incoming deposits first, then migrate subscriptions and payroll, then close the old account after one full billing cycle. Step 24 is build a relationship, not just an account. Send your banker a brief update twice a year with highlights of revenue trends, key wins, and upcoming needs. When a real request arrives, like a temporary limit increase or a small line of credit, you will not be a stranger. People approve faster when they understand who you are and see steady, responsible behavior. Step 25 is prepare for audits and funding conversations. Keep a simple archive of monthly statements, reconciliations, and year-end financials. When you apply for a loan, you will be ready with clean documents. When a partner asks for proof of financial health, you can provide it without scramble. This readiness is a brand asset your competitors may not have. Step 26 is protect your account with layered security. Use a password manager, unique strong passwords, and two-factor authentication. Lock cards in the app when not needed. Set transaction alerts above an amount that would hurt to lose. Train your team to verify payment changes by phone, because email compromise is still common. A few small habits will block most threats. Step 27 is handle special cases with foresight. If you are a sole proprietor today but plan to form an LLC, open the sole proprietor account now to get moving. Then open a new account for the LLC when formed and migrate cleanly. If you run a partnership, finalize a clear operating agreement that spells out who can sign, who approves, and what happens if someone exits. If you are a non-resident forming a local company, expect extra identity checks and prepare additional proofs to smooth the process. Step 28 is build transparency into your pricing and payouts. If you invoice clients, show bank transfer options and clear due dates on every invoice. If you pay contractors, set a weekly or bi-weekly payout schedule and communicate it. Predictable money rhythms lower friction with everyone around you and reduce support messages that waste time. Step 29 is add a small emergency buffer. Keep 1 month of operating expenses in the business account if possible. Even a partial cushion changes how you make decisions. You will not chase every invoice in panic, and you can accept good opportunities quickly because you know payroll and suppliers are covered. Step 30 is celebrate the new clarity you created. A business bank account is more than an administrative step. It is a daily system that turns effort into evidence. Clean statements tell your story to lenders, partners, and future you. The account becomes a quiet teammate that makes everything else easier. Thank you for staying to the end. If this script helped you feel confident about opening your business bank account, subscribe to Success Lens for more practical guides that turn complex money moves into simple steps you can apply today.